You saw how foreclosure drained Menchie and Chris. Today, we flip the script. I'm giving you real, verified solutions that help real families save money, protect credit, and keep their home. Hit subscribe now and follow on Facebook, Instagram, because one tip here can save you thousands. Step 1. Don't go alone. Call a HUD-approved housing counselor. Certified counselors help you map options, talk to your servicer, and build a budget, often free. You can search counselors through the CFPB tool or call HUD at 800-569-4287. This is official, trusted, and fast to start. Why this matters? Counselors know loss mitigation programs and can escalate with servicers. If Menchie and Chris had called early, they could have stabilized before fees ballooned. Federal servicing rules generally bar a servicer from making the first foreclosure filing until you're more than 120 days delinquent. That window exists so you can apply for help. Use it. Apply for loss mitigation before day 120 to maximize protections. Translation: if Menchie and Chris had submitted a complete application early, they could have forced a review before a foreclosure move. If your loan is FHA insured, HUD has a clear menu of home retention options. Depending on hardship, you may be eligible for repayment plan, forbearance, standalone partial claim, loan modification, combo modification, plus partial claim, and payment supplement. These are official HUD options designed to keep families in their homes. Repayment plan. Catch up over time. Forbearance. A temporary pause and reduction to get through a setback. Partial claim. HUD advances the arrears into a subordinate, no-interest line, moving your current payment, usually no monthly payment on that piece until payoff or refinance. Loan modification combo. Adjust rate and term, and often wrap in arrears into the balance to reduce the monthly burden. Payment supplement. A newer tool that can temporarily lower the payment during recovery. If Menchie and Chris were FHA, a partial claim plus mod could have cured delinquency and targeted an affordable payment before the spiral. For many conventional loans owned by Fannie Mae or Freddie Mac, there's payment deferral and flex modification. Payment deferral moves missed amounts to the end, due at payoff, sale, or refinance, so you can resume your regular payment. Flex modification aims to hit a targeted reduction in principal and interest. Fannie's guide describes steps designed to reach around a 20% P&I reduction when possible. Bottom line, if Menchie and Chris were conventional, they could have asked their servicer to check ownership, Fannie-Freddie loan lookup, and request deferral or flex modification to lower the monthly. For short-term hardship, job cut, medical, forbearance can be the bridge. It's not forgiveness, it's a pause so you can stabilize and then work a plan: deferral, modification, repayment. CFPB's guidance lays out forbearance and exit options you can request before foreclosure. The key is communication. Call early and document everything. If Menchie and Chris had asked for forbearance immediately after the cut-in hours, they could have avoided late fees and preserved options. When saving the home isn't viable, exiting smart still protects savings. Two options. CFPB notes a deed in lieu can mean you won't owe the deficiency. Confirm in writing. Either path can be less damaging than foreclosure and may include move-out assistance. If Menchie and Chris had negotiated a deed in lieu with deficiency waiver, they could have avoided the extra $30,000 chase and reset faster. Tax alert. When mortgage debt is forgiven in a short sale, deed in lieu, or foreclosure, the IRS can treat it as taxable income, but many homeowners may qualify for the mortgage forgiveness debt relief exclusion on a principal residence through tax year 2025. Caps and conditions apply. Check IRS guidance and consider a tax pro. If Menchie and Chris exit via short sale, they should ask, will I get a 1099-C? Do I qualify for the exclusion? That clarity can prevent a surprise tax bill. Reality check. Foreclosure can stay on your credit report for 7 years from the first missed payment that started it. Alternatives like modification or short sale may still impact credit, but often less than a full foreclosure. Your goal: avoid the foreclosure mark and then rebuild with on-time payments and low utilization. If Menchie and Chris had avoided the foreclosure entry, their recovery clock would have been shorter and cheaper. Next, squeeze savings inside the mortgage.
These are standard lender and escrow conversations. Small changes can keep families current and out of default.
Here's exactly what Menchie and Chris should do, and you can copy this. This is the path Menchie and Chris needed, and it's the path that can protect your savings. If you're on the edge, act now. Call a counselor, contact your servicer, and ask for the specific programs we covered. Subscribe to Money House Media on YouTube and follow on Facebook, Instagram. We post money-saving strategies designed to protect families and homes. Share this with someone who needs it. This video is educational and general in nature. It is not legal, tax, or financial advice. Programs vary by loan type, investor, insurer, servicer, and state law, and they change over time. Always consult a HUD-approved housing counselor, a qualified attorney, and a licensed tax professional before making decisions. Money House Media, NMLS 10200597. If you believe you're at risk of foreclosure, contact your servicer immediately and seek HUD-approved counseling at 800-569-4287.